Hi everyone, my name is Amandeep Singh and I'm a CPA at Cloudiverse CPAs. As you know that the Justin Trudeau's Liberals have won a minority government, with the Conservatives finishing a few dozen seats behind. This result means that the plan of the Conservatives to scrap the significant Liberal changes to the tax system on income sprinkling, also called tax on split income in short form, TOSI, will not be realized. Before the new rules limiting the income sprinkling were implemented, as a small business owner or an incorporated professional, you could easily redirect your business income to your family members who are in lower tax brackets, usually by issuing dividends. So you, the small business owner, was able to direct any amount as a dividend in a particular tax year to a given family member, so long as the family member was also the shareholder of the company. Now, this strategy only used to work for lower income family members who are 18 years old and older because of the kiddie tax rules. In other words, family members who were under 18 years, highest tax rate was applied to the dividends received. So that was never an option under the old rules as well. You might ask, what has changed under the new TOSI rules? Well, the changes to the rules now cover adult shareholders of private corporations in addition to the minor children. Moreover, the rules are particularly strict for adult shareholders between the age of 18 and 24. You see, this period majorly falls in the years in which the shareholders attend post-secondary education, which under the old rules allowed income sprinkling, as many business owners were paying for their children's university education by paying them dividends, which got taxed at a lower rate. The question then becomes, if you are a private corporation owner and you would like to pay dividends for your relatives who are the shareholders, when can you do so without getting caught under the new rules? Essentially, to escape these new rules, your family members have to be able to show a significant involvement in the business. The government introduced a series of bright line tests to determine whether your business is using income sprinkling as a way to avoid taxes rather than paying your family members for their legitimate work. These tests specifically exclude the following from the new TOSI rules. Number 1, your spouse whose age is over 65. Number 2, your family members who are over 18 years old and are working at least 20 hours per week in your business during the year or during any of the 5 previous years. For example, let's say your family member sits on the board of directors of your company and receives a dividend in lieu of director's fees. Some suggested ways to meet the exclusion test would be to give your family member an official title, provide him or her with business cards, have your family members submit timesheets, and ensure that the meeting minutes indicate the presence and list the topics discussed in the meeting minute. There is no guarantee that this strategy will work every time. Of course, as the risk is that the CRA might still not agree that the excluded business tests have been met, in which case the income will be subject to TOSI and taxed at the top rate. Number 3, your relative is over 25 years of age and owns not more than 10% stake in the company, and the company income is less than 90% from the provision of services. Please bear in mind that this exemption does not apply to professional corporations, such as the corporations of doctors, lawyers, and accountants. To put this another way, at least 10% of the business income needs to come from the sale of goods. If you don't meet this exemption already, you might have to ask yourself, is it feasible to change the legal form of the business to meet the percentage? Instead of just providing a service, can the business offer the same service by using its own product? For example, instead of providing upholstery services to furniture sellers, can the business be altered to purchase the raw materials, apply the upholstery services, and then sell the product? I totally understand that in some cases it may not be feasible to alter the scope of your business activities, but it is something which you can definitely consider. If the limitations on income sprinkling have restricted your ability to do tax planning and you don't want to take the moderate risk to get covered under the exceptions which I just discussed, you might want to look at other income splitting strategies which don't fall under the ambit of the tax of split income rules or even the attribution rules. These are: number 1, prescribed rate investment loans to your spouse. If your spouse or partner has lower income than you, it might be beneficial to deploy a prescribed rate loan strategy whereby you give a loan to your spouse or partner at a fixed prescribed rate, currently which is 1%, who can then invest the funds in a portfolio of dividend paying stocks. Any income or gains earned over and above the interest expense will be taxed in the hands of the spouse, regardless of their age. Number 2, pension income splitting. The income splitting rules do not apply to the splitting of pension income. Eligible pension income can be split among married and common law couples to a maximum of 50%. Number 3, spousal RRSP. If you are married or are in a common law relationship, you may choose to direct some or all of your RRSP contributions to your spousal plan to split the retirement income. This planning works best if you think that upon retirement you will have a higher income or have accumulated more retirement assets than your spouse. With a spousal RRSP, you can effectively have all of your RRSP or RRIF withdrawals taxed in your spouse's or partner's income. Moreover, your spouse will see a tax-free return on that money as well until the spouse withdraws the money. With the new restrictions on income sprinkling, you need to be very careful. As the TOSI rules are complex and contain many undefined terms, there are no quick and easy answers, and your CPA will research each situation carefully before providing any guidance to you. I hope you found this information useful. For more tax tips and tricks, please visit our website, the link for which is given in the description of this video. Please like and subscribe and click the bell icon to get more tax tips and updates. Thank you. You have a good day. Bye for now.